I was recently talking to a relatively newer dividend investor and we were going over our portfolios, etc. And they happened to ask me if I were to start over today and I didn't have a 7-figure portfolio full of different dividend paying stocks and ETFs, but instead if I was just getting started and I only had $10,000 to invest in dividend paying ETFs, which ETFs would I personally invest into and why? Which is exactly what we're going to go through in this video today. I'm going to break down my long-term strategy when it comes to dividend investing and share with you all exactly how I would personally spread out $10,000 if that for whatever reason was all the cash balance I had to invest today, and share with you exactly which ETFs I would buy. So if you want to see which ETFs are going to make my top list and how I would spread out that $10,000, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to back up for a second, before I share with you the exact ETFs that I would purchase with that $10,000 investment, I want to share a little bit about my strategy, my personal strategy when it comes to dividend investing. And this has more or less been my strategy since I started around 7 or 8 years ago. Now, my strategy, even from the start, has always been relatively simple. It's to invest into high-quality, different dividend-paying stocks and ETFs that all either pay a large amount of dividend income from day one, or if not, pay a nice starting yield, but have the potential to have some massive dividend growth long-term. Along with that, I generally look for different dividend-paying stocks and ETFs that also have the potential to move up in price over time, just to allow my portfolio to grow as the years go on. Now, lastly, my strategy is sort of mixed between income investing and dividend growth investing. You're going to see some names in my portfolio that are most likely going to trade sideways, but pay me a ton of dividends from day one, and vice versa. But if I, for whatever reason, was starting over today, building out a portfolio with a $10,000 budget, I first would deploy around $2,500 of that $10,000 budget into none other than the SCHD ETF or the Schwab US Dividend Equity ETF. Now, the reason I would deploy around $2,500 or around 1/4 of my entire budget into SCHD is because I really can't find a better foundational position across the entire market, and trust me, I've tried, for my specific strategy. Now, that's because SCHD, of course, has a high quality basket of holdings, but on top of that, this ETF pays a nice decent starting yield, around 3.5% where it's trading currently, which isn't going to give investors all that much cash flow from day one, but at the same time, it's not a 1 or 2% yield, so it is going to give you a decent amount of cash flow even from day one. But along with that, SCHD has the potential to keep growing over time, which is going to make my portfolio and net worth go up. But most important, maybe right here on the screen, SCHD, at least historically, has paid more and more in dividend income to investors, which means that even if I'm not going to get paid all that much cash flow from day one, later on in the future, I'm expecting to get paid more and more in dividend income from SCHD. Now, because of those reasons, this is going to be a perfect foundational position, and that's why 1/4 of my portfolio at least would be SCHD if I was starting over with 10K. The second position, the second ETF that I would add to my portfolio with my $10,000 budget would be a $2,500 investment into none other than the JP Morgan Nasdaq Equity Premium Income ETF or JEPQ. Now, the reason I would also make 1/4 of my entire portfolio JEPQ is because this ETF not only also like SCHD has grown as far as ETF price over time. JEPQ is up around 10% in the max time frame, and over the last year, this ETF is up around 10%. But also for an income-focused ETF, quote unquote, this ETF also has grown over time substantially, is pretty cheap to own at just around 0.35% expense ratio, but also this ETF pays a massive dividend from day one, around 9% more or less trailing 12 months, which is giving investors like myself somewhere in the high 30 cents more or less on average dividend payout every single month for an ETF that costs around $54 per share. Now, because like I personally shared, I want to build a portfolio that for the most part is going to grow over time but pay dividends from day one. And if there's no dividend growth offered with that ETF, it better pay a nice decent yield, which JEPQ definitely does. Now, with a $5,000 budget left, I would definitely deploy around $2,000 into one of my favorite ETFs, an ETF that's not honestly all that popular for whatever reason, but I'm talking about DIVO, the Amplify CWP Enhanced Dividend Income ETF. Now, DIVO in the max time frame is looking amazing. It's up around 60% more or less, and this is since around 2016, but keep in mind DIVO pays a massive starting yield compared to a lot of other ETFs out there that have this sort of chart. Now, owning DIVO is not only going to grow my portfolio over time, but this ETF pays around 14 or 15 cents every single month in the form of dividend income, which I can then reinvest into more shares of DIVO or use the money to live off of, etc. DIVO is currently one of the largest positions in my long-term portfolio and has been for years. DIVO is one of my favorites across the board, which is why I would definitely deploy around $2,000 into DIVO. Now, with around $3,000 left for my portfolio with the $10,000 budget, I would definitely deploy $1,500 of that into SPYI, or the NEO's S&P 500 High Income ETF. Now, even though this income-focused ETF hasn't been around all that long, it's traded pretty good on the max time frame and has offered investors like myself a massive total return, which is dividends plus price return included. Now, SPYI is only up around 4.21%, but offers almost a 12% trailing 12-month dividend yield, which again, like I said, as long as my investments move up at least slowly to the right and pay me either a ton of dividend income from day one, or if not, pay more and more in dividend income long term, that's what I'm personally looking for. Now, SPYI pays around 50 cents more or less every single month to investors, or at least has historically. So that means that with a $1,500 investment into SPYI, I'm going to get paid a decent amount of dividends from day one. Now, the last $1,500 would go into none other than FEPI, or the Rex Fang Innovation Equity Premium Income ETF. FEPI is a really interesting ETF that invests in a small curated basket of holdings and utilizes covered calls for a massive amount of dividend income, at least historically. FEPI is not only traded up and to the right on the max time frame, up around 5%, but this ETF has a 17.4% trailing 12-month dividend yield, which is going to give an investor, even with a relatively small investment, a massive amount of dividend income from day one. Now, even though FEPI does have the cover call overlay, I still think because of the holdings within this ETF long term will not only trade sideways if worst case scenario, but also keep moving up and to the right. But either way, because of FEPI's strategy, this ETF is offering a massive amount of dividend income to investors, which is why I would invest my last $1,500 into FEPI if I were to have to. So there's exactly how I would personally invest a $10,000 cash balance into different dividend paying ETFs across the market if I were to have to pick just a few. Now, of course, there's tons of other stocks and ETFs that I would also invest into if I were starting over today, but just going off of my specific strategy, and if I were to have to pick a handful of some of my favorites with a $10,000 investment, that would be what I would choose. Now, of course, you could also just take the $10,000 and invest into the S&P 500, or just invest it all into SCHD and probably do just fine long term. But if you're a dividend investor that has some specific goals and some specific tasks that you're solving for, building out a portfolio with different ETFs, different assets that all offer different things might be a good option also. But now lastly, I want to hear from you guys down below. If you, for whatever reason, had a $10,000 cash balance, allowance to invest into only dividend paying ETFs, which ticker symbols would you personally invest a $10K into? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.